What's up, everybody? Doriso here. In this episode, we're looking at a couple of stocks that I'm personally buying that I believe will recover after the stock market crash ends. These are stocks that I personally own in my stock portfolio that I've been documenting since my portfolio started at $0. If you're new, I've been investing in the stock market for 10 plus years, and I'm tracking a new portfolio here on YouTube to show beginners with little money that it's possible to grow your money sooner rather than later, especially coming off lows during the stock market recovery. My investment strategy focuses on stocks that have growth potential over the next few years and have brand recognition to weather a storm like a recession if one comes in 2020. If you're looking to build your stock portfolio from $0 to infinity, click that like button and subscribe for the journey. Let's kick off with Apple. Quick disclaimer, I'm not a financial advisor and these stock picks are based on my opinions. Never rely on someone else's viewpoint when it comes to investing. On to Apple. Apple stock is my largest stock position at this time. Keep in mind, I've only been depositing little money at this time to show beginners it's possible to build a stock portfolio over $100,000, then $1 million, and it just keeps going on. The value is limitless, which is why my motto is $0 to infinity. Everyone starts at zero and builds wealth at their own pace. We will hit six figures before you know it. In this market environment, I wanted to make sure my biggest stock position had a strong balance sheet and large cash position to get through the stock market crash, along with a brand that's recognized. During a stock market crash or recession, I prefer to invest in stocks that have the ability to generate solid free cash flow. I believe Apple is one of the strongest companies in the world and has plenty of net cash to get through tough times. Cash is king during recessions. Based on my research, Apple has generated nearly $64 billion in free cash flow over the past 12 months, and I think Apple is well prepared financially to recover after the stock market crash in 2020. I personally believe Apple's brand will continue to be a top technology company in future years. I've been in the Apple ecosystem since a kid, starting with my first original iPod. Did you have one of those? The transition from a bulky and outdated CD player to a small device called an iPod that was capable of storing hundreds of songs was a game changer. I still have tons of old school CDs still in my closet, but now I just use my iPhone. I must say, I was a bit late upgrading my old flip phone to a new iPhone around 2012, which was about 9 years ago. For my college years, all my roommates, they had MacBooks. I upgraded my old HP to a MacBook, and I'll probably never change computer brands since I'm so familiar with Apple products, using them since a little kid. Now that my generation, the millennial generation, is getting older, we have money to upgrade our phones and MacBooks every couple of years if we want. Everyone wants to have the latest version of an Apple product, which is why I like the stock long term, especially with the 5G coming out later this year. Even college campuses and large businesses carry Apple products for their students and employees. The Apple ecosystem is huge, and there's a huge barrier to entry when it comes to competition against the Apple brand for consumer goods. History has shown that any discount on Apple stock has been a terrific investment to hold forever, which goes along with my personal investment strategy. Remember, this is not financial advice. I'm not a financial advisor. These are all just my opinions. On to my second stock, Fiverr International. I've gone over my viewpoints of Fiverr in past episodes. I think with recession talks growing, the freelance market will continue to grow as well, especially with people losing their jobs and needing to make money. The gig economy is real. Fiverr is a place for talented individuals to showcase their skills in all types of projects like graphic design and photo editing. The list goes on. There are a ton of other ways to make money on Fiverr.com. During a recession, I think many companies will need to fire a lot of employees and find ways to get things done at a cheaper cost. Fiverr may be a perfect source for companies to find freelancers to work on projects at a cheap price since Fiverr.com has talented people from all over the world willing to do work for less money compared to the going rate here in the United States. My third stock is Penn National Gaming, which is in the casino industry, and the stock has been getting crushed during this recent market crash. Eyes are on this stimulus package getting approved to help many companies running out of money during this time. Penn stock hit around $4 per share not too long ago. I do feel that Penn National Gaming really took a huge blow with all of these closures and shutdowns. Sports have been canceled, and some people think the upcoming football season later in the fall may be in jeopardy. If you've been following along these episodes, you already know I'm a huge sports fan. Football fans would go nuts if things aren't back to normal by September. Time will tell how everything plays out. I do feel once sports are back on, the fans and gamblers will be ready. I'll be keeping a close eye on all announcements about the Barstool Sportsbook app, which is supposed to be released later this year. I believe people will always gamble even during a recession, and I think Barstool Sports as a brand is undervalued at this time. On to number 4. Starbucks is my fourth stock at this time, another top brand around the globe. Starbucks is another stock that crashed from the highs this month in March 2020. Many investors sold the stock because of all the store closures and shutdowns during this market crash. In my opinion, people live off of coffee during weekdays, and I don't think this will change. Will a name brand like Starbucks lose customers during a recession? Sure, that's definitely a possibility. Almost every company will lose customers or see revenues take a hit during a recession. I do feel that people may cut back on their trips to an actual Starbucks store and will increase the amount of ground coffee they purchase at the grocery store to meet their budget each month. Remember, Starbucks doesn't just make money from people that walk into a Starbucks and pay $3 or $5 or sometimes even $10 for a cup of coffee. There's also a revenue stream from Starbucks branded consumer packaged goods, including K-Cup pods that you find in your local grocery store. Starbucks brand is a global brand and will continue to sell products during a recession, in my opinion. Another point I wanted to mention is to highlight the fact that during a recession, many local mom and pop coffee shops may indeed go out of business. When this happens, Starbucks, in my opinion, will gain more market share since they have a balance sheet and cash reserves that's not in the same league as the small coffee shops in your local area. Without a large credit line to get through a recession, I think Starbucks will become a more dominant brand around the world over the next 10 or even 20 years. Plus, if there are no dividend cuts, I'll continue to collect my dividend payment each quarter as millions of people consume their cup of Starbucks coffee. Also, to add, local delivery of coffee will continue to rise, in my opinion. Plus, a Starbucks $25 gift card during the holidays or a birthday is one of the easiest gifts to give to anyone. A ton of people drink coffee, and I think that will continue during a recession. During this stock market crash, I will be very selective with buying more stock. No one knows when the stock market bottoms. I have plans to continue to deposit more and more money into my portfolio as we move forward with these episodes. So there's my list of stocks that I think will recover after this stock market crash ends. All of my stocks include top brands that I think will continue to grow for years to come. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for entertainment and informational purposes only. Let's keep building from zero to infinity. Make sure to subscribe and watch my previous episodes so you can follow along as we continue on the journey. Peace.